Friends, welcome. In this video, you're going to learn best scalping trading strategies that based dominant footprint that cause bounce from a size. What's the beauty of this strategy is that you have very low predictable risk and potential profit is really huge. In this lesson, you will learn how you can make money on this strategy, what big size means, spot versus futures, how to trade different markets, how to open trade, set stop losses, take profits. Watch till the end, because exactly at the end, I will show you two real examples for spot and for futures market, how to do all of this stuff by real trades that I did and recorded for you. And if you enjoy, remember to push like, subscribe. It's really important for our channel. Let's start. Friends, this lesson I mostly record for people that that are in our free signals channel. By the way, all of you, I highly recommend you to join our free signals channel. There would be a link exactly in description. Like a few minutes ago, at 12 o'clock, I gave a signal on Uni as also bounce from a size by that strategy. Big size 444,000 coins on spot. We took a trade and only within 3 hours, 3:09 p.m., Uni rose by 2%. That's beautiful. And for me, it's so important, especially those of you that inside in this signals channel, that you know how to use it, because I want you to make money. When you make money, I think you will recommend our channel more often. Write in the comments, will you recommend our channel more often if you make money by these free signals? First, the most important question, what big size means and why we take all our trades nearly as that big size. Big size, it is a significant order, limit order in DOM. In most cases, such orders are set by whales just to move price into their favor. There could be limit orders for sell and for buy. How we determine in what cases limit order for buy and for sell? First, pay attention to a price. If, like at this moment, this stuff, it is a price, it is a current price. If limit order above the price, it is for sell. It is sell limit. If limit order below the price, that means it is for buy. That's it. If we have significant size for sell, we take a trade short before size according to the strategy. If we have a size like today on Uni, we had a size at bottom. We took a trade before it, set stop loss above and took long. I will show you more example to be understandable. Those of you that watch this video first time, below this video there would be a link on a lesson about what's dominant footprint, and also lesson about these platforms where you can watch it. Watch this video till the end, and after that watch that lessons in description and in cards. A few examples for you for big size. Once more, this dot 116,000 coins at price 7.51, and what you can do, you can multiply that size, 116,000 coins, multiply by price 7.5910. It was $872,000 sell limit at this price, and price, by the way, bounced from that. Another example, SEN, 25,000 coins at price 1792. It is approximately 440k. And by the way, have a look, we gave that signal yesterday. I gave that signal to people to take long before that size, pay attention. And after that, within few hours, price rose by 3%. Beautiful. Agree with me? Is it beautiful? If it's beautiful, push like and subscribe to the channel, and remember to turn on the bell. It's so important, because only in that case YouTube will promote this channel to more people. That's the best thank you from your side. Let's go. Another example on Bitcoin, the same. We took a trade on Bitcoin. Let me show it to you. 2nd of August, significant size appeared in a DOM of Bitcoin, 1,000 coins at 22,600. And after that, Bitcoin bounced by 4% from that size. Within few hours, it bounced by 2%, and within one day, it bounced by 4% from that size. It's beautiful, my friends. How to open a trade? We have, remember that we have two markets. We have spot market and a futures market. What's the difference? Because in most cases you will trade on a futures market because we have leverage and we have bigger possibilities by using futures market. We can short coins. That means when I analyze DOM and footprint, I always have two DOMs. I have DOM of spot and I have DOM of futures, but I always open trades on the futures. Once more, I can use leverage and I can make money while price rise and while price drops. For futures market, it's really easy how to open a trade. Let me show to you by practical example. But before, few seconds of theory. Let's go by this example on Zen that we took 2 days ago about this significant size, how we open a trade because it is on the futures market. First, pay attention. Price, like in this case, didn't reach big size exactly. Sometimes price, there would be a significant size, and sometimes price exactly reach it. In some cases, price will bounce before that size. That's why how we build our position. First one, it is big size. Biggest part of your trade. Let's do this example. Your working volume will be $1,000. It is your working volume. And what you do? $1,000 you should divide by 3 parts. First part, that I recommend you to have at least 0.5% from this size. You can take 10% of your trade, for example, $100, and enter here. I mean $100 in worth of coins. Another part, I would recommend you to use at 0.2% from a size. Here you set 30% of your size, $300. And the biggest, the most significant size, you set exactly nearly size. Why it's so important? Because in the cases if price bounce without you, you still will be in a position. In a case if price reach significant size, you will have biggest position and biggest part will be exactly at size, and your stop loss will be really small. Let me show to you an example how I did build a position exactly by this approach. Have a look on this H-bar example. What happened, what I did here. I took a trade, bounce from a size. It was short, pay attention. I had, in a DOM, we had 2 significant sell limit orders. 1,600,000 coins, 1,280,000 coins. And pay attention that this red thing, it is my limit orders, my friends. As you can see, before the price, I set this limit, additional limit, big limit before first size, the biggest limit before higher size. And after that, what happened? When price slowly, what price did? Price step by step filled my significant order. Price approached to it and pay attention. They took my part and that's it. That's why once more, how do we build our position according to this approach if we trade futures market? This would be your significant size, and once more, you build it by parts. 10% higher, 30% closer, and biggest 60% exactly at size. How do you set a stop loss? On a futures, it's really simple. In every case, you set stop loss after a size. Pay attention that in this case, my stop loss was this one. Do you see SL? My stop loss was exactly after a size. Example on a Zen coin that we took yesterday. Pay attention, SL. SL, it means stop loss. Pay attention that my stop loss also exactly below the size, because that's what's the beauty when you trade bounce on a futures market, because big size becomes your wall that protects you. It's like those of you that saw Game of Thrones, it is like a wall that protects you from wildlings and night white walkers. Friends, if you see that it's useful for you, push like, subscribe. It's important for us because YouTube will show it to more people and we will create more content for you for free. Also, if something isn't clear for you, feel free to write into a chat any question, and when I have free time, I personally will reply to you and help you in your questions. For futures, it's really easy. What's the difference on a spot market? Let me show to you by this video example. You will understand it. It is a trade on a coin AAV. And pay attention that big order, 8,300 coins. on a spot market, but I took a trade on a futures market. It is my entries, it is my average price, it is my size, and I trade on the futures. What's the biggest problem here? That you don't have big order where you can hide your stop loss. That means when you trade spot, when you have size on a spot by you trade futures, you will have biggest stop loss. That's the problem. That's it. That's why what I do, I simply set a stop loss mathematical 0.3%. When I open a trade by using this approach. That's it. And like in that case, my stop loss were here. Why we do it? Because you will see many times that's when you have big size on a spot, price bounce, but during that time futures market can do some volatility, and it would be really sad if you, for example, set a stop loss like here at 36. Price can take your stop loss, and but spot still will be their size, and price will move into your favor. That's why it's so important to have it. The last and the most important question that most of you would ask, how we book our profit. Let's do by these examples that we took today. I book profit by parts. What I recommend you to do, have a look. This green stuff, it means my entries. It is places where I build a position. And this red means when I get out. Like today on LRC, significant size were, but price didn't reach it, and only half of my position were executed. That's why I didn't make full amount of money. And as you can see, we have red stuff here, red stuff here. I book this trade by parts. I never try to pick best place, that's it. What I recommend you to do, when price reach 1% into your favor, when price reach 1% into your favor, book at least 20-30% of your trade. Better on that place you can book to be out of risk. 20-30%. When price reach 2%, book additional 20-30%, and after that you should see by technical analysis what to do. By the way, we have a full lesson about technical analysis, full course, how to use technical analysis in your perspective, because to take 1%, 2%, or keep it for 20, it depends where this size according to technical analysis, and you need to know that. Friends, remember to subscribe to this channel. If you enjoy, also turn on the bell and write comments that you have according to this strategy. And watch this lesson about technical analysis, how to use this domain footprint with technical analysis and make really big fortune. Thank you for watching.